If you're concerned you might outlive your money, I've got bad news. Even if you're a high-paid professional, it's an accurate and rational fear to have. You should be concerned. And as you'll discover in the next few minutes, it's because conventional financial wisdom is wrong. It's created by special interests, and it's rigged against you. The stock market is not the answer. Your IRA, your 401k are not the answer either. Your wealth advisor, very likely a nice person, but misguided. They're just as likely to die broke as the next professional. What about gold, silver, other precious metals? Sure, they might have a role to play in certain market conditions, but they aren't the answer either. It gets worse. Our financial system is an avalanche waiting to happen. It's not a question of if, it's a question of when. The too big to fail banks of 2008 are even bigger. And the derivative market, what Warren Buffett calls weapons of mass financial destruction, has grown to over $1 quadrillion. $1 quadrillion! I can't even think of what that number looks like. And all it's going to take is one little snowflake to unleash the fury of the whole thing. A big hedge fund making the wrong bet or another Lehman Brothers, and we will see the unraveling of Wall Street again, and this time even worse than 2008. And who do you think will pay the price? You, of course. But you're not powerless. Today in this instructional video, I'm going to show you how to turn the tables, to give you choices, education, information. And I will guarantee you that at least once in the next few minutes, as I pull back the financial veil, you will say, why didn't anyone ever tell me this before? Now, before we start, let me tell you a little bit about myself. My name is Buck Joffrey, and I'm not a financial advisor. I'm a physician. And this is me, fresh out of medical school. I completed my surgical training in 2008 when most senior physicians I knew lost over half of their portfolio. You know what? I was a great surgeon, and when I took my first job with a big corporate group, I started making lots of money. And up to that point in my life, I knew only success. But guess what happened? Well, I got canned. I got canned for doing things the way that I wanted to, the way I thought was good for patients. And the higher-ups, well, they didn't want me to do it that way, and so they canned me. I was devastated. Listen, I started out as a brain surgeon, and I could drill through skulls without a change in heart rate, but this was a kick in the gut. Getting fired was failure, and I'm ashamed to say that when it happened, I cried like a baby for days. For the first time in my life, I had no direction, no curriculum to ace, no surgery to master. I was in free fall. But after a few days of feeling sorry for myself, I got back up and went to work. I went into business for myself. And you know what? I became a millionaire in short order, which created yet another problem, which I hadn't even anticipated. I had to figure out what to do with all my money. Now, if you're a physician or some kind of high-paid professional, you know that feeling. You go from broke, right? You're a broke student to suddenly making a decent chunk of cash. You have no idea what to do with it. Most of the time, young doctors like me would just, ask the senior guys what to do, and they would give you the name of their wealth advisor. But this was 2008. All hell was breaking loose in the economy, and all those doctors who seemed like they had their financial act together were losing all of their money because of Wall Street greed. Now, why in the world would I listen to them? But that's what my other colleagues seemed to be doing. It was the blind leading the blind. Even though conventional financial wisdom had failed them, they couldn't break away from it. Why? Well, conventional financial wisdom was that curriculum that replaced school, and A students like me love to master the curriculum, even if it doesn't make sense. Now, here's where being the child of a scrappy immigrant really helped me. I called out Wall Street BS. I wasn't going to drink the Kool-Aid, no way. I also realized that a lot of wealthy people got richer during this mess, and the next time around, I wanted to be on their side. And to do that, I had to learn how to play by the rules of the wealthy. And that became my obsession. And for the next few years, day in and day out, I fought my way through the treacherous jungle of investing. I looked for knowledge, high and low, dodging shark-infested waters of the financial world. Those financial advisors hungry to prey on well-to-do professionals like me with lots of bad advice. And this was harder. It was actually much harder for me as an A student than completing 11 years of medical training after college. You see, there was no curriculum for this, and A students like me, well, we're really good at learning things that are spoon-fed to us. But the secrets of the wealthy are buried behind a veil of secrecy and purposely fragmented according to how much money you actually have. It's almost sort of like peeling away layers of an onion. There simply was no roadmap for me to follow, but eventually I cracked the code. I broke through to the other side, and it was like I was blind, but now I could see. And what I saw was absolutely life transforming. You know, in 2008, when I finished my medical training, I had a negative net worth. I owed a lot of money. But today, my net worth is well into the 8-figure territory. Now, I don't tell you that to flaunt my wealth. That's just not the way I am. I still drive the same Toyota that I bought the day after I finished my residency. And to be frank, 8 figures, even though it sounds like a lot, is peanuts compared to a lot of the people that I know. And those people are the people that I learned from. And what I learned transformed my life. And now that obsession that I had to learn it all, well, now it's become a mission to help you realize that you too can invest like the rich and create more wealth for yourself than you ever imagined. And perhaps more importantly, not die broke. So now, let me give you just a taste of what I've uncovered. Now, most people, when deciding about where to invest their money for the long haul, think that their only option is to choose one mutual fund over the other. However, and you might have already guessed it, mutual funds are one of the worst investments you can have. According to the S&P Indices versus Active Funds scorecard, 96% of mutual funds failed to beat the market over a 15-year period. With this type of track record, you'd think mutual funds would be long out of fashion, right? Well, the opposite's happened. Did you know that there's actually more mutual funds in the U.S. than there are stocks? Crazy, right? That's because mutual funds are a gold mine to those who manage them. The average size of a U.S. mutual fund is $1.58 billion. And it gets worse. The reality is that mutual funds are one of the worst investment vehicles from a tax perspective. And this is because shareholders of those funds share tax liabilities, regardless of the length of ownership or when you purchase the fund. This means many investors bear a tax burden even if they didn't benefit from the profits. Then we get to the fees. You pay an average of 4 to 5% of your investment for the fund to invest for you. That means that you have to see at least a 5% return just to get back and break even. And we're not even talking about inflation here or the hidden fees involved. Now, when annual fees and the actual rate of return for an average mutual fund are calculated, historically it would take over 29 years to double your money, even with the rosy projections that wealth advisors give you, which is just not enough. It won't be enough for you to survive, let alone thrive. Now, you may have heard this all before, but it is astounding to me how many people still keep their money in retirement accounts in mutual funds. They call it safe money. What is so safe about having money strategically placed somewhere that is pretty much guaranteed to run out before you die? Now, there are, of course, better ways to get your money to work for you, and most people think that simply means index funds. Index funds do have lower fees than mutual funds and essentially mimic what the market does, which means they outperform actively managed funds 9 out of 10 times. Less fees, better return. Sounds good, right? Sure, it might be a better investment, but the bar was set pretty low with those mutual funds, right? Index fund or not, the equity markets are volatile and unpredictable. You don't believe me? Remember 2008? How did those index funds do for you then? Was that a one-off? Before that, there was the dot-com bubble in the late 90s. My own father nearly lost everything in that one. And then that wasn't it. Then before that, there was Black Monday in 1987 and the massive correction that ensued. Now, you notice a pattern here? I mean, listen, you don't have to be a genius. It seems like every 10 years, there's a huge financial crisis, and the last one was 2008. Now, what year is it again? Now think about all of these unpredictable ups and downs. Feels sort of like being a casino, doesn't it? The problem with spending your retirement money at the casino, however, is that the house always wins. And on top of that, we live in unparalleled financial times. What do I mean by that? Right now, as a nation, we have $20 trillion of national debt. Now, let's put that into perspective. From the Civil War up to the year 2000, we had only about $5 trillion of national debt. We've quadrupled in just the last 2 decades alone. So what does that tell you about the trajectory of our economy? Things have changed over the past few years. We are in uncharted territory. Does it make sense to keep playing in the Wall Street casino when your future is at stake? No, of course not. Whether it's mutual funds or index funds, it's still a gamble because you're still playing the speculative capital gains game that was set up by Wall Street. So what are your other options? Well, a lot of wealthy people I know happen to get a lot wealthier even when there was blood in the streets in 2008. How do they do that? To understand the answer to that question, let's establish something up front that has become abundantly clear to me. There is a 2-tier investing system in our country. One is for the poor, the middle class, and even high-paid professionals like you. They follow a certain set of investing rules that were created by Wall Street as conventional financial wisdom. The other tier is the tier of the rich, right? The rich, on the other hand, play by a different rule book altogether. For example, if the rich touch the stock market, they make sure that they use vehicles that allow them to amplify their returns and even eliminate the loss of risk. If they invest in things like real estate, they use the tools that allow them to amplify returns, maybe even invest their money in 2 different places at the same time. Now, most importantly, they make sure a significant portion of their investments result in cash flow, not just capital gains. Now, what does that mean? Well, I'm sure you have some idea of what I'm talking about. Let's use an example, though. Let's say you buy a business for $1 million. While it's true the business itself can appreciate in value and you could just sell the business for more than you bought it for someday, hopefully, the reality is that's still playing the capital gains game. You may be able to sell it for profit and you may not. But if the business can reliably and consistently put $10,000 per month in your pocket, you're now investing for cash flow. You didn't buy a stock. You didn't buy something just to appreciate. You bought an income stream. There's not a need to sell the business if it's making you money. Same with real estate. You can buy a property for $250,000 and hope to sell it for more, or you can buy a rental property that consistently puts thousands of dollars in your pocket every year. Again, you're buying an income stream, right? That's what you're doing here. And if the value of the property goes down, who cares? Your tenants still need a place to live and they pay you rent, right? Even if the value of the property goes down, you still have a stream of income. Now, the rich invest in all sorts of things, you know that, but most of their investments produce a stream of income. Now, if you're like me, you might have read Robert Kiyosaki's books at one point in your life and got inspired by the notion of cash flow investing. But if you're a full-time professional, you might be thinking, well, there's just no way I have time for all that. I'm not going to go run a business or buy a business and try to become a manager or become a landlord and buy real estate. I can barely see my kids as it is. But what the rich know is that you can invest in these kinds of opportunities the same hands-off way that you can invest in the stock market through private placements. Private placements are the investment of choice for the uber wealthy, and really there's no reason why you can't participate as well. If you know where to look, there's an abundance of opportunities out there to invest passively in private businesses, real estate, notes, you name it. The problem is, who do you trust? After all, if you go to Google right now and type in passive investing in real estate, you're going to get tons of ads with glossy web pages and important sounding titles for people. And there are plenty of people ready to take your money, believe me. In fact, as a guy who is known as an investor in the space, I get deals every day in my inbox. A lot of them are from people asking me if they should invest in them. What do you think I do with those emails? I just delete them. You see, anyone can make a pro forma look good. I can make swampland in Florida look good on an Excel sheet. So unless I know, like, and trust a person who's sponsoring some kind of an opportunity, I won't even look in it. You see, your network equals your net worth. That is the single most important lesson you can learn if you want to become wealthy. I invest in people more than I invest in deals. The numbers are important, but only if I can trust them. And in order to do that, I have to know, like, and trust the people. You see, the more people who you know, like, and trust, the more opportunities you will have to invest confidently in lucrative investments. I have accumulated a lot of people over the last decade who I know, like, and trust, and my wealth has grown linearly, literally with the number of those people that I know. Now, what I'm hoping is that my tribe, as I call them, will become your tribe as well. Because once you have a tribe you can trust, you're in a good starting place. But then you still got to know what you're doing. After your network, the second most important factor in your success is your level of financial education. You need to constantly increase your financial IQ so that when you see a good deal from a trusted source, you can jump on it quickly and decisively. Now, speaking of financial IQ, I have to tell you something. Now, every time I think that I know it all, I learn something new that I had no idea existed, and I ask the same darn question. Why didn't somebody tell me that before? The thing is, I actually think it's a lot of fun. I really enjoy that kind of sleuthing. But let me give you just a couple of examples of the types of things I've learned. One of my favorites is a secret product that I've learned about from the wealthy that I call Velocity Plus. Now, this is a strategy used by most people who have an ultra high net worth, typically $20 million or greater. But I figured out a way to make it available to just about anyone who makes at least $100,000 per year. Well, maybe that's you now, or maybe that'll be you soon. At any rate, let me just tell you a little bit about this strategy because it's mind-blowing. Now, remember I told you that I don't like the stock market because it feels like the casino. But what if you could control the outcome? What if you could engineer it so that you only win? Now, Velocity Plus is a strategy where you can literally take most of the upside of the stock market every year, but if it crashes, you don't have to participate. In other words, you don't see your portfolio destroyed by the next crash or bubble. But that's not even the whole story. Because your downside is protected, banks are happy to issue you more money to leverage even more into an account like this. For most people, that leverage can be 3-to-1. The bank is letting you borrow money to invest more because there is very little risk for them. So what does that mean for us? Well, say the S&P 500 goes up 7% in a given year. Because you're leveraged 3-to-1, your return is actually just under 20%, not 7%. And again, if the market crashes, you don't lose anything. Sounds good, right? Well, Velocity Plus also allows you to grow your investments tax-free. Now, let me repeat that again so you don't miss it. Tax-free. So tax-free, no downside. Beat the S&P 14 out of every 15 years. Doesn't that make you want to get up now and sign up? Well, I'm signing up for one of these accounts right now, so I certainly feel the same way. With that kind of financial engineering, even I can learn to love the stock market. But wait, there's more. This investment vehicle is bulletproof to creditors. If you're a high-paid professional, maybe you're a doctor and you get sued, you don't have to worry that you're going to lose your nest egg. And the companies that provide these kinds of products are historically more stable than banks. Believe it or not, the companies that provide this kind of product have been around since before the Civil War and have thrived through the Great Depression, World War II, the dot-com bubble, the real estate crash, and every other financial catastrophe over the past 150 years. Banks have failed, countries have collapsed, but these companies thrive through it all. Now, if you're hearing about this concept for the first time, you might be thinking, why haven't I heard about this before? Why doesn't everyone know about this? It doesn't seem fair that the ultra wealthy know about this stuff while 99.9% of the rest of us don't. How is that possible? Now, let me open up the black box for you. You see, the ultra wealthy don't hope that their investments work out. They engineer them to work out. Hope is for the poor and middle class. Now, let me give you another example. There's another product that pays you the tax equivalent of 8 to 9% annual compounding return. That's not bad, right? A lot of people would take that alone in a heartbeat. But here's the kicker. You can also use this account to effectively invest the same money in two places at the same time. What? I know, it sounds unbelievable. So let me give you an example because I haven't even gotten to the best part yet. Okay, check this out. Say you've got $100,000 in this account and it's growing at 5 to 6% compounding interest. The key word here is compounding, right? the magic of compounding interest. You've heard that one before. You can actually borrow money from that account at a simple interest and invest it into something like investment property, some other cash flowing asset. Now, you might be thinking, of course, you can do that with a home equity line of credit too, right? Yeah, well, here's where things get interesting. With this kind of account, when you borrow your money at a simple interest rate, it continues to grow at a compounding rate in the original account, even though you borrowed it. That is called double dipping, investing the same money in two different places at the same time. Does that sound like something that would help you grow your wealth quicker? Again, I can tell you from personal experience, it does. Again, this is just financial engineering. It's what the wealthy do. It's what banks do. So in this product, we are just acting like the bank. You determine and set the terms of your loan. So the only person who says you can or can't do a 5% loan for 20 years is you. Once I learned this double dipping strategy, I realized that all my ultra wealthy friends were already doing this for cash flow investments. This is an old strategy. It's nothing new. It's used by the wealthiest families in the world. It was used by the Romneys and the Rothschilds for hundreds of years, and there's no reason why you can't use it too. Now remember, if you want to be wealthy, you have to start doing as the wealthy do. I mentioned the Rothschild family. The Rothschilds own banks, real estate, mines, farms, vineyards, energy companies, real cash producing assets, and they leverage their cash as much as possible and engineer successful outcomes of their investment. It is not luck. It's an unfair advantage, and you can have it too. I personally invest $500,000 in this kind of vehicle myself, a type of account that your wealth advisor will never tell you about, a product that you will never hear about on CNBC or from any other financial pundit. But you will hear about these kinds of strategies and a lot more from me. In fact, many people that I have showed this to have wisely diverted their money from IRAs and 401ks into this kind of account instead. So let's summarize what we've talked about. Now, over the past 10 years, I've gone from a negative net worth to well into the 8 figures. I did it by building a tribe of trusted advisors, through financial education, and through uncovering strategies to engineer wealth. When I look back at all that I've learned and the relationships I've gained, I realize that I could have actually done this much quicker if I only had a roadmap, but I didn't. Now, the good news for you is I've created it. I just put together my first ever training program around all of these financial secrets. I hired a professional film crew and one of the most talented course producers in the world. I assembled the very people who taught me just about everything I know about creating wealth in one place. This is my tribe, and they are going to teach you the same thing that they taught me, and hopefully they will become your tribe as well. Putting this thing together was a labor of love. It's something I wanted to pass on to my children someday. But before that, I want to pass it on to you, the hardworking professional who deserves to have the same information, the same opportunities as the ultra wealthy. I call this program Your Roadmap to Real Wealth because that's what it is. The course is taught by me and my tribe, many of the world's leading experts in these behind-the-veil strategies. Now, here's just a taste of what's waiting for you when you sign up. Now, inside, you're going to get 5 modules of video and audio training with me and my advisors in real wealth creation. In order to help you consume the information better, the course is released 1 module at a time over the course of 6 weeks. In the first module, I start by revealing the belief systems you must have to become wealthy. They will defy conventional wisdom, but they will change the course of your financial life. You're going to discover the 7 core principles of wealth creation, which will prevent you from ever outliving your savings. The same principles used by families with generational wealth. And you're not just going to learn the theoretical. You're going to learn and have the tools you need to begin your journey to financial independence by understanding the importance of and ultimately leveraging my tribe. Now, Module 2 will transform the way you think about money. Let's take taxes, for example. Did you know that tax code serves 2 purposes? Well, first, it's to pay for things like roads, public education, safety. But the second purpose of the tax code is to encourage you to invest in certain ways that the government wants. The tax code is just a series of incentives. And since for most people, the biggest expense in their life is taxes, it pays to know what those insider secrets are. You know, I have had multiple seven-figure income years where I legally paid no taxes. And if you think I'm the only one, you're wrong. How did I do this? Well, I learned everything I know about taxes from Tom Wheelwright. Now, Tom is amazing. Tom is a former Big Four accountant. He's been called by President Donald Trump, like him or not, the best of the best. And he also happens to be the personal tax advisor to Rich Dad, Poor Dad author Robert Kiyosaki. He is going to teach you exactly what he taught me. Now, in Module 2, you'll also get one of the leading estate planning and international asset protection planning attorneys in the United States, Kevin Day, who's an expert on issues affecting business owners and high net worth individuals, including offshore money strategies. Now, again, Kevin is my personal estate and asset protection attorney, and he's going to blow your mind with strategies that only the ultra wealthy really know about. Did you know, for example, that you can set up a company to put liens on your own property and make them useless to anybody who wants to sue you? It's called equity stripping, and it's one of the many techniques that I learned from Kevin and that he teaches you in this course that help me sleep better at night. Module 3? Well, Module 3 is all about real estate. Why? Because the wealthiest people in the world own real estate. And if you want to become wealthy, you have to get in on this game. And who better to teach you about real estate than the real estate guys themselves from the Real Estate Guys Radio? My good friends Robert Helms and Russell Gray will give you the fundamentals of real estate investing and how to leverage it to create real wealth. And don't worry, investing in real estate doesn't mean tenants, toilets, and termites. I mean, do you think Donald Trump, who is a real estate guy, right? Do you think he deals with that stuff? Of course not. I'm going to show you how real estate investing can be just as easy as investing in paper. To do that, I've got my friend Ken McElroy, a genius at network-based investing and the real estate advisor to Robert Kiyosaki. He's going to offer you a unique perspective on how you will get the biggest return on your investments. Now, this is the same knowledge he uses every day to manage his over $700 million under management. Now, Ken is not only a friend of mine, but he's also a guy who's part of my tribe, and I invest in his projects. You'll also get training by Marco Santarelli. Now, Marco will show you how to find exclusive investment opportunities in growth markets around the United States, and maybe even more important, to show you how you can own them in a turnkey manner so you can set it and forget it. Now, there's other modules as well where you'll get training from me, plus people like George Newberry, who after being left $26 million in debt after a natural disaster, didn't file for bankruptcy, but instead developed a strategy to gain leverage over creditors, settle huge debts at huge discounts, and sometimes even erase debt completely. Now, the interesting thing about George is that he doesn't invest just his own money. He gets a lot of financing through investors who get great returns on their investment. You could even invest a few $100 with George, and he'll give you 12% annual return on your investment issued as a monthly check. I've also got my friend Mauricio Raul to teach you. Mauricio is a master at the game of alternative assets, which is really where real wealth is created. He will teach you all about syndications or private placements. You can virtually invest in anything you want through these vehicles, and it doesn't have to be buying a stock. Now, Mauricio also happens to be one of the leading compliance and asset protection lawyers in Southern California, and he's actually my SEC attorney. And of course, I've got Dean Graziosi. Dean is an entrepreneur who sold over $2 billion worth of educational products, and he is going to explain what real wealth really means. In addition to getting those training sessions by all of these brilliant individuals who are members of my tribe, you're going to get separate roundtable Q&A sessions with almost all of them. And you're also going to get audio files, PDF summaries, and worksheets for each session for reinforcement. Of course, that's not all. You see, the problem I've seen most people face is that they get access to training like this and they consume the information, maybe even think to themselves, this is brilliant, but then they stumble as they start applying their knowledge to the real world, which is why you'll get 12 months free access to our online community forum called the Wealth Formula Network, which will allow you to become an insider in my tribe. the same tribe that has helped me to become financially independent. You will be able to leverage the collective intelligence of the entire group, of not only the experts, but of your peers who are on the same journey as you. This exclusive private community will really let you put your tribal investing into high gear by giving you immediate access to like-minded individuals to work together and to achieve more. I strongly believe that investing is a team sport, and that is why this is an absolute must for you to act quickly and secure your access to Wealth Formula Network. The information inside your roadmap to real wealth is worth millions. I am living proof of that. You see, one of the biggest advantages of the ultra wealthy is that they invest in financial education. And I can tell you personally that every year I spend 6 figures investing in my own education, going to workshops, seminars, masterminds. I spend tens of thousands of dollars, even on one-time events. And every time I can tell you they're worth every penny. I don't see them as expenses. I see them as investments and measure them in ROI, return on investment. So what do you think a course like this would be worth? A course that has taken 10 years of my life and all of the secrets that I've learned during that time to go from someone broke to someone worth multiple 8 figures, to give you all those secrets and to introduce you to all of those people in my tribe. I can tell you personally that in 2008, when I finished my training and I was looking for this information, I would have paid $10,000 in a heartbeat. But the reason for me to create this course was not to make money. It was to fulfill a mission to help hardworking professionals like you to realize that there's a better way to invest that does not involve the Wall Street casinos. So I wanted to make this affordable. So to help offset the cost of film production, which literally costs hundreds of thousands of dollars, I'm making these trainings available for just $197 per month for 12 months. Now, if you elect to pay for the full year in advance, you can save an additional 20% and get a bonus 1-hour coaching session with me. Now, I have to tell you, I don't coach for money. And the reason is, honestly, my hourly rate would be way too high to justify. But if you are committed enough to this financial education to pay for the whole course in advance, I'm happy to do it. In fact, I'll even throw in a 14-day money-back guarantee so you have nothing to lose. I'm confident you'll find your investment with me to be one of the best you've made for actively taking responsibility for your financial future. Understand what I'm offering here is the opportunity to compress time, to learn from my mistakes, to gain financial wisdom that I've accumulated over a decade, and to cultivate the network that I have during that time in my journey from being completely broke to a multimillionaire. This is your roadmap to real wealth. So take action now. Sign up because this really could be the most profitable decision of your financial life.